What is going on, investors? Hopefully you guys are having a great day out there. It is time to talk about Snowflake Incorporated, ticker symbol SNOW. The company just came out with their Q2 earnings. We also got guidance for Q3. We will talk about both of those things. I also want to get into the numbers. We'll take a look at the revenue. We'll take a look at the profits with this company. Hasn't been around that long, at least in the public markets. So we'll see how this business is scaling up, not only from a revenue perspective, but a potential profit perspective. I don't think any of you guys are watching this expecting them to make an operating profit, but we'll talk about how it's scaling up because the revenue growth is absolutely phenomenal. Then what I want to do is talk about this one from a technical perspective. This one is looking unbelievable. I tell you what, if you look at this chart and you get super excited, well, your chart reading skills are pretty good. And if you don't understand it, I'm going to help you walk through this, and I'm going to show you that this stock could potentially have lots more room to run, and that is impressive. Now, speaking of running, this stock in the after hours is close to $295 per share. That's good for about a 4% gain in the after hours. That's off being about up 1% during the regular trade. That's a big move because this is an 81 billion, not million, $81 billion stock. This is a massive stock, and we'll talk about if that valuation makes any sense here in the coming minutes. Now, first thing I want to talk about is the headlines are going to say slower product sales growth, okay? Because when you come over here to the product sales over at Snowflake's, we see well over 100% growth. You went from $133 million worth of sales up to 272. That's good for well over, a little shade over 100% growth year over year. Now, that is for Q2. So we had about 103% year over year growth on the top line for Q2. Q3, which is the upcoming quarter that they just gave guidance for, that is expected to be up 89% year over year. And so the guidance is coming in between 280 million and 285 million. That is for the upcoming Q3. Again, I just showed you they had a quarter where they did 272 million. They're projecting the next quarter between 280 and 285. Now, Wall Street was expecting much closer to 290 million. Usually when you come in under guidance, stocks don't react like this. So it could be that Wall Street, number one, they don't care. Number two, it could be that they recognize maybe Snowflake is being ultra conservative in those guidance. We'll see what happens. I would expect Snowflake to, at the very least, come in at the upper end of these guidance in the next quarter, probably close to $290 million worth of revenue. Now, that's Q3 guidance. I want to focus on Q2 because we've got a stock here with an $81 billion market cap. We got a stock from a technical perspective that is looking absolutely fantastic, and we'll talk about that more here in a second. Let's take a look at the Q2 and see if all of this is adding up for a good investment over at Snowflake. We've got our right-hand column is on a quarterly basis year over year. Right-hand column is last year. This left-hand column, the far left-hand column, is this year over year on a quarterly basis. The two right-hand columns are 6 months basis, so we get a year over year view on 6 months of revenue. Now, we've got our revenue here on the top line. I talked about how we grew this by a little over 100%. We went from 133 up to 272. Now, what people get excited about Snowflake is their gross profit, okay? Because off of $272 million worth of revenue, their costs are only, and I say only because this is not a lot of cost, at $106 million. That gives them gross profit of $166 million. That is really impressive, and that did double over the previous year. So we're seeing this business scale up from a cost of revenue gross profit perspective. That is checkbox number one. You like to see that. Now, me personally as an investor, somebody that loves companies like Microsoft and Google and Facebook and companies that have really gotten their operating expenses under control, when we double this top line, I'd like to see these operating expenses not double because it's showing me that this business is starting to scale. Now, unfortunately, we are not seeing that over at Snowflake because take a look at this. We went from $92 million up to $182 million over at Snowflake's on the sales and marketing side. So that is basically a double. We've got research and development here. We went from 36 up to 118 18. That is more than a double. And then we got general administrative as well. We went from 31 million up to 65 million. So we're seeing our cost more than double. Here's our total operating expenses went from 160 million up all the way up to 366 million. Now, I want to remind you, this is a company that did $272 million worth of revenue. Their operating expenses are $366 million. And they do have, look, those aren't all the expenses. We had $106 million worth of cost of revenue, or maybe product cost as well. That means that this company's operating loss, because we take our gross profit, we minus our operating expenses, that gives us an operating loss of $200 million. I'll remind you, we had $272 million worth of revenue, and we have $200 million worth of operating loss. That would put this stock absolutely in my personal penalty box, but it doesn't necessarily mean that needs to be for you. Okay, every investor is different, and every investor makes their own decisions, and every investor has risk tolerance, because I talked about this is a company with an $80 billion valuation. Let's take a look at the 6-month revenue. The 6 months revenue is coming in at $500 million. Now let's give Snowflake credit for a little bit of growth. And we'll say that over the next 6 months, you can double this and give them a little bit of growth, $1.2, $1.3 billion worth of revenue for the full year. You're still trading darn near 80 times sales. Okay, not 80 times earnings. You're trading 80 times sales on that one. That is incredibly, just absolutely incredibly rich for a company like this. So if you are very bullish Snowflake and you're not buying this one just for a swing trade or some kind of technical trade, okay, that's completely different. If you're buying and holding Snowflake, here's the things that you want to look for. Obviously, you want to see revenue not necessarily stay at the 100% level or the 89% level, but it needs to stay really high, okay? Because you got companies like Microsoft, you got companies like Facebook, you got companies like Google. These companies are still growing mid-30s or even higher than that. Not to mention Amazon and Apple. They're growing in that range. Those companies are wildly profitable. They're doing share buybacks. They have dividends. So before you invest in a company like Snowflake, I would encourage you to have a full portfolio of the mega cap tech stocks that are not necessarily growing this fast. Okay, they're not growing as fast as Snowflake, but they are doing a lot of shareholder friendly stuff, and they are very well positioned for the future. Now, if you feel Snowflake is well positioned in the future, you need to see these revenues continue to accelerate. And the big thing you need to happen over at Snowflake, not necessarily in the next 6 months, not even necessarily in the next 12 months, but you need to see evidence that they're getting these operating expenses under control. We'll talk more about these operating expenses here in a second, because a lot of it is stock-based compensation. But I'll tell you what, see this office at Snowflake? I actually drove by it this last weekend. We had a family party. I drove by the Snowflake offices. I didn't go inside. It's right by a major freeway. But I tell you what, okay, where these offices are located is extremely expensive. Not just to live, to eat, to rent, like gas, everything's super expensive. So you gotta pay your employees one way or another. And in Snowflake's case, which we'll see on the cash flow statement, they're paying them, instead of with cash, they're paying them with Snowflake stock. So this stock going up is going to have those employees feeling really good heading into tomorrow. Now, from a balance sheet perspective, recently IPO'd company, as you can imagine, just absolutely phenomenal. At the beginning of the year, we had about $3.8 billion worth of cash. Now we've got actually over $4 billion worth of cash. Receivables basically the same. Our total assets basically unchanged, sitting right around $6 billion. From a total liability side, I mean, they have almost no liabilities, okay? So from a balance sheet perspective, again, as you'd expect from a company that just raised money from the public markets, you'd expect the balance sheet to be absolutely crystal clean, and it is. Now, from a cash flow perspective, I don't think it's very useful. Other than you need to keep in mind that a lot of these costs, obviously up here, are not cash. They are Snowflake stock, okay? They're paying the executives, they're paying the employees with a lot, and I mean a lot of Snowflake stock. Because take a look at this. In the most recent quarter, stock-based compensation, $163 million. This is a company that did $272 million worth of revenue. $272 million worth of revenue in the quarter, and they paid their employees $163 million worth of stock. Tell you what, if you had a job over at Snowflake, you're probably feeling pretty good about that. Okay, now, it does make cash flows from operations look really good. Look, they only lost like $6 million from cash flow basis, but you got to pay these employees one way or another. Eventually, the stock-based compensation, the ability to do that and dilute shareholders is going to slow down, okay? You had 59 million shares outstanding. Now you got 279 million shares outstanding. Eventually, that's got to slow down a little bit, or it will catch up with you. The more shares that are out there, the more people there are to be able to sell them and get rid of them and drive the price down over at Snowflake. So from a cash flow perspective, I don't think there's a lot to learn here other than they're paying their employees extensively with the stock, and you'd like to see that level out at some point. Eventually, that will level out, and that will help probably these operating expenses. Because when and if they start paying their employees and executives with more cash versus stock, well, it should start to flatten out a little bit. So we'll see what happens, because look, companies can give these shares out basically like their monopoly money. Well, cash actually has to come from the balance sheet or operations. That's a little bit harder to do. Snowflake is not there yet, but eventually they will be. So just keep that in mind if you're going to invest in this company. Now, from a technical perspective, forget about every freaking thing I just said, because this chart is a thing of beauty. Like a lot of IPO stocks, like a lot of hyped up IPO stocks. You can look at Coinbase chart. You can look at Nikola stock. Any stock that is hyped by YouTubers over and over and over again, those stocks tend to run huge. And Snowflake was hyped here on YouTube. It was hyped on Seeking Alpha. It was hyped on CNBC. It was hyped everywhere. And it rallied hard. It bought into that hype and went all the way up to $430. That was like basically at the beginning of the year. And it fell hard. It fell all the way down to $180 per share, and it has started to rebound nicely. So you might be wondering, is the run over? Are the good times over? The first thing, if you bought Snowflake at a higher price, and I would say above $320 per share on this one, you're still pretty, not significantly, but you're pretty significantly underwater, and you would have bought in this really, really hyped up euphoria. Anything over $320 per share, here's what I want you to do. When a company goes public, like a Coinbase, like a Snowflake, like any of these stocks, not only in the past, but certainly in the future, don't buy early on. Every chart, Uber, Facebook. I mean, we're talking about Facebook did this exact same thing. It rallied hard, came all the way crashing down. Almost all, I would say almost all. And look, if it doesn't, it just chalk it up as a stock you just never caught right at the beginning. But almost all of these hyped up IPO stocks come crashing down. Wait until they come crashing down. And in this case, form just a beautiful bottoming formation, okay? This one bottomed out down here in the $200 range, and it looks absolutely fantastic. And it has been on a nice run, okay? Back in May, this thing was at $180. Now we're at $295. And you might be asking yourself, is the rally over? Me, from a technical perspective, I don't think so. I think we're coming all the way up to $320, which is like $30 more than where the stock is right now, before we see any significant resistance. Now, some people might drop this down to $310. I certainly see some small areas here where the stock could get hung up at $310, but I think we're going from $295 at least up to $310. So if you're looking for this one to go higher, you're looking for a break above really $310, $320. You get above $310, $320 on this one, and I tell you what, there's not a lot to slow this one down from a momentum perspective. Look, is it going to get there overnight? Is it going to get there next week or next month? Not necessarily, but if you can get above $310, $320 on this one, $330 is easy to play, and look, all the way up the ladder. Not necessarily all the way back up to $400 per share, but certainly in that range. So from a technical perspective, Snowflake is checking every single box you could possibly have. Okay, it had a massive run. It came crashing down, formed a beautiful bottom. Now it's found momentum and it is churning higher. I think from a technical perspective, this stock, it would be hard for it to reverse its trend. Now, from a fundamental perspective, doesn't make any sense to me as an investor. Look, I love 100% top line growth, okay? But again, this is a company where you're paying darn near close to 80 times sales. Forget price to earnings. They don't make any money, okay? I don't think this company is anywhere close to being profitable. They're diluting you absolutely into, the stratosphere with this one. And look, that is going to slow down. And me personally, I don't mind monitoring Snowflake for 6 months, 12 months, 24 months. There are companies that I've monitored for a very, very long time before I've actually bought their shares. This one, from a technical perspective, looks like a good setup, but from a fundamental perspective is something I would pass on. And if you don't have a full allocation of companies like Microsoft, companies like Google, companies like Facebook, companies like Apple, companies like Amazon, this needs to be in your speculative portfolio, and you need to work on building up a portfolio of the aforementioned companies I just rattled off. Now, if you have a full allocation of FANG and those types of stocks, look, you could play around here, but it would be, in my opinion, a small amount of your portfolio, because from a fundamental perspective, it doesn't make a lot of sense. Any hiccup in this, and this $81 billion valuation will come crashing down. If you are long this stock, you're looking for this to go to like a $300 billion, $400, $500 billion valuation company, which would put it up in the likes of like Nvidia and those types of companies. So it would really have to grow. So we'll see if it's able to do that. I'd love to hear your comments down below. Technically, this one looks great. Fundamentally, it's certainly a little shaky, but it can look better in 12 to 24 months. And I will continue to analyze this company over that time frame and see if we get closer to where this could absolutely be a part of a much longer term portfolio as it starts to grow into its valuation, and not only grow into it, but potentially grow it much higher. That was Snowflake. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.